Brings me nicely to the stock of the day, which is Rio Tinto, put out its half-year report and lifting its first half dividend by 43% to $2.11 US. That's after posting a 43% jump in underlying earnings for the first half off the back of stronger commodity prices and higher production, really driving that sharp lift in profitability. Underlying earnings hit $9.82 billion. That's against expectations for $6.78 billion. Underlying earnings climbed 28% to $14.8 billion US. Free cash flow up 75%. And that was really helped along by a 3% increase in copper production. And we've had some comments just in the past few minutes coming from the Rio Tinto CEO saying that they are looking at ways to monetize that U.S. copper project, Kennecott, I think it is. I could be mistaken. But let's get a view from my guests on Rio Tinto, because look, you first, Michael. That's not a bad way to start reporting season, but it's really questions whether there's more to go in terms of Rio, because the share prices continue to rally today. I know it's all about the dividend, stupid.
No, look, I mean, I think there is more to it, and I do think that there is a lot more upside in Rio. I mean, of course, I'm, a commodities bull at the moment. I do believe we're in a commodities bull market. We're a holder of Rio. I've bought Rio for other clients in the past couple of weeks. Look, in terms of the technicals, in the past couple of weeks, it's provided a few buy signals. It's bounced off the 200-day moving average. It's given us some bullish divergence with the RSI and a buy signal on the MACD. So for those who understand the lingo, that's all positive. So, and then with today's move, already we're seeing a lot of volume. So interestingly, before today, there were some reports that short positions in Rio had been increasing quite a bit in the past several weeks. And I think the concerns were due to perhaps demand out of China might not be there, but I think the lesson is, so for all our viewers, when it comes to commodity bull markets, they come about because of a lack of supply. So I think try not to get too confused about, where the demand's going to come from. So commodity bull markets are because of many years of a lack of investment in supply. So as we've seen with today's result, I think trying to short Rio or sell it because you're worried about demand, you're just going to get run over. So those shorts are covering today. I think that's pretty clear. So today's a buying opportunity. I mean, if you don't buy Rio today, based on all the signals and everything going on, I think you'll never buy it. So I do think it'll run to a new high. Don't know what else to say. It's a buy.
It's a buy. If you've ever heard one before, Heath, that's Michael's view. Would you be buying Rio at these levels? I mean, yes, it's had a little bit of a pullback in the past few weeks, but still, I mean, is it expensive?
It's not too expensive. I think it's probably fair price. I'd honestly, I've got to hold on it simply because of their product mix. I mean, more than 50% of their profit still comes from iron ore. The other half basically is copper, lithium, and aluminium. That copper sector, should start to grow a little bit more and take more control of that profit, which is what we want to see. But the report this morning was stellar. But it was to be expected. I think it came in line with most analysts' forecasts. Free cash flow, net debt, all the signals we're looking for from a resources company were fantastic. But I mean, for me, I'd prefer BHP over Rio simply because of that dominance in copper. Now that BHP has with copper, it's not. I find when resources companies start to diversify too much, it is harder to hold on to them simply because it's very rare that all commodities go up in unison. Whereas generally you have one doing really well and one not doing so well. There's still a lot of questions around iron ore and, its future. Simandou came online and is ramping up. And obviously Rio has a stake in that. But, what that does to, iron ore prices probably puts downward pressure on iron ore prices, brings them down closer to that $80 a tonne in the near term, 6 to 12 months. I mean, which is still great because, I mean, these guys are producing around $30 to $35 a tonne. But, I mean, if it fell 10% or so, I'd be a buyer on Rio. But at these current prices, I'm happy to hold.
Okay, there you go. That is what makes a market. Still prefers BHP though. Heath there.